Welcome back to the Daily Journal. So let's review the 2 a.m. 4-hour candle on Nasdaq's price action from Friday. So it's this continuation that we're looking at, right? 2 a.m. opened. I was looking for this continuation. Let's have a look. So starting off on the 4-hour charts. Let's rewind the clock. So we'll start at the open there. Okay, great. So I was initially looking for, potentially a reversal of the previous day low, since we had one-sided delivery, and we had these relative highs over here, as well as this 4-hour block. So I was looking for price to, sweep the lows here, trade into this, and then continuation. That was the idea going into the 2 a.m. Also because we had, swept these lows, right? The 10 p.m. candle had swept those lows. So I was looking for potentially 2 a.m. to sweep those lows and continue higher. That was the initial idea, but going into that session, let's just clean this up a bit. That happened at midnight, that sweep, and we did have a change in state delivery here on the 15 minutes. And so that trade idea I was talking about, I was looking at the 1 a.m. to deliver to that. Right? So I was looking at price. I was like, great, if we can trade into this fair value gap, this is obviously that change state delivery, and then continue higher, and then I'll look to trade into these Asia relative highs. So that was the initial idea. And of course, then we just sold off, right? And so I wasn't interested in that. 2 a.m. is when I start trading, and so I very seldom will, sometimes you get like a quarter to two, if you get a 1 minute market maker model, because if you look at this, off the previous day low, if that was 2 a.m., I would trade that to these highs every day of the week. Right, there was the low down here somewhere, right? So you can see this is, at this point here, and you get that change state delivery here. If this was 2 a.m., I would have traded to these highs straight up. But time had not aligned with price. So yeah, I was, if it had continued higher, then I would maybe look for, to trade up to these. Or if it didn't give me an opportunity to enter, I'd look to trade, shorts at 2 a.m., right? But anyway, so this is what ended up happening. And with that 15 minutes close, we closed beneath that. And so now this is just a continuation of that downtrend that we've been in since yesterday. So then at that point, okay, let's just wait for this to close. This is really annoying. It's on 1 second. Okay, there we go. Okay, so with that next candle, I'm just going to give me some space here. Oh yeah, so there we go. So this is a classic continuation setup. The 4-hour candle is expanding, and the 4-hour chart has been expanding. Right, so we've failed to come up and take out these highs, so that's clearly going to be left for later. And as I understand it, London is going to continue. Right, we had that 4-hour just expansion. Asia then did a small retracement, and now London is going to continue lower. And so I'm looking just for a simple continuation from this fair value gap to this low. Because the thing is, there's not really any other liquidity beneath this until much lower. So I wasn't going to trade and just hold this thing for the rest of the session. The idea was just, I was very conscious of these relative highs above. And of course, that's going into the London Open here at 3. So let's just drop down to the 1 minute, which is where I was executing. And for this, I'm going to flip my chart. It's just, you would have seen me do this, multiple times now. When it drops down to the 1 minute, I just can see things a lot clearer on the 1 minute. So I just flip my candles as well. So as far as I'm concerned, this is long. Okay, so we know there's a fair value gap here. And this is the quarter to 3 macro. and here's the let it open. There, okay, so let's just bring this forward. Okay, so it's at this point, there's SMT with, we need to flip this around. There's SMT here. Yeah, so this low has been swept on ES where it has not on NQ. So immediately I'm like, yes, cool, great. And I'm looking for this high to be inverted for change state delivery. And so there's the open. So I would have liked to have seen these lows swept, but I didn't require it because simply if we had dropped lower, I mean, this had already dropped into the lower part of that 50-minute gap, right? So let's just add a candle here so you can see. You can see, okay, there we go. So we had respected the midpoints, give or take. I didn't want to see that low again taken out. I want to see this candle expand. So I'm waiting for a change in that delivery. Now here's the thing. I wasn't too keen on this because of this consolidation essentially. I would have preferred to have seen straight down and then just pump, but I knew the 1 a.m. was coming, sorry, the London open was coming up. So I wanted to see these lows get taken out. But when I saw the sweep, yeah, there we go. So once we closed above that, I was like, okay, fine. We're expanding away to my Rotafuku highs. Cool. And it was on this candle. I think it was on that pullback. Sorry, let me flip this around. Technically, it's a short. I got in with, and that was the trade. I think. Let's go back to the moments. What did I use? I think I used this. Pretty sure. And then I think my two are, let's have a look. I think it's over here. Yeah, so yes, that was that. So this was the 15 minutes change state of delivery over here. And I think that was what I used as, yes, so just like that. I use this as my risk. And oh yes, I used the sweep from the open, because standard deviation is always best as a time-based tool. So as well as obviously price, time and price, right? So that was the trade. Now here's the thing. We need to bring up YM for this. Okay, this is YM. Yeah, cool. So this trade ended up taking, hitting TP, but it was a break-even trade for me, and I'm going to show you why. Okay, so you can see at this point, YM had taken out and swept that high. So I immediately just went to stop to break even. Remember, we got relative good lows here, and here's the thing, right? So I'm going to zoom out for this. So we'll just let this play out, and it eventually goes to hit TP. I mean, it's not, there it is. So, you know, it takes almost an hour to deliver that. Not the cleanest trade, but listen, at the end of the day, it's you trade the logic, not the pattern, right? Whether this thing delivered directly or chopped around, you know, the logic remained the same. And that's what a lot of traders get tripped up on. I know I did in the beginning, is that, you know, if it's not looking clean, if the price action's trash, is what I often hear people say. Trade the logic, not the pattern. And that's just your emotion speaking. When you're like, oh, this doesn't look good to me. That's your emotion speaking. Is the logic playing out? Yes or no? There is no gray area with trading with a mechanical system. Okay, so why did I enforce that SMT rule? Well, when we zoom out, and we're going to flip the chart for this back to where we were. Look at what we've done. We've taken out previous day low, we've taken out pre-market low, and we've taken out this low. So, I mean, I don't know what price actually did after this, but I think we actually came up and took out that high. Well, there we go. There's my points, right? The fact that we had SMT here with YM, NASDAQ could easily have reversed to take out that high. It did, but and it yes to hit my TP first. It went to 2 to 2.5 standard deviation. Look at that, man. That's incredible. So that's why I was enforcing the SMT rule. If we had all this liquidity beneath me, I would be happy to keep that trade running. And the case in point, right? This trade would have been stopped out. If I had held this as a runner, it would have been stopped out. And for anyone who's just starting off, I promise you, start by trying to trade 1 to 1 hour trades. Because the entry is the easiest part. You need to know where price is going. Without knowing your drawn liquidity, your entry is going to become invalid, right? Because if I had been like, okay, I got this entry and the price is trading low and I'm going to hold down for that low high time frame level of the previous weekly low, you're going to get stopped out almost every time. So learn just to take your low-hanging fruits. That's where it comes from. Find the low-hanging fruits. If you can just don't even worry about your risk reward. Just nail consistently where price is going. And I said this often, right? As RCT says, once you know where price is going, your entry is the least important part. What's next important is your invalidation. But when you know where price is going, your invalidation, just know where price is going to invalidate you if that your liquidity is incorrect. And if you're right, it's going to hit your take profits before it hits your invalidation. That's why it's the most important part. Invalidation second, entry is the last or least important. Anyway, guys, go check out my New York reversal video from later on that day where we go trade up to these highs from the previous weekly low down here. Best trade of the month so far. Arguably one of the best trades of the year so far as well. So, yep. See you guys in the next one. Please like and subscribe, and I'll see you then. Ciao.